In fact, we'll talk about this as we go along. But for now, let's welcome in our next guest. We have Vikash Kumar Jain, who is the India Strategist and Head of Research at CLSA, joining in to discuss some of the big expectations that we have from the union budget. Vikash, thanks so much for joining in. Great to have you on. Big morning for everybody here. Now, balancing this whole issue of boosting the economy at the same time being within the fiscal framework, that perhaps is the biggest challenge. Do you think the government can pull it off? What are your main expectations?
I think what we need to focus on is what exactly is the number of... See, budget is typically a statement of intent given by the government. Yeah. I would say it just tells you what are their key priorities. To me, the last budget was for one of the first times when I started feeling that the number one priority of the government was discipline, to bring down fiscal deficit after the whole COVID-led excesses were over. Yeah. If you might recall, the interim budget that they gave in February of 24 had a fiscal deficit of 5.1%, coming from 5.8% in FY24. They had targeted 5.1%. Then there was, talks of excess dividends from RBI that happened around May. And when the budget for July, after the new government was sworn in, when that was given, about 50 bips of extra dividend, nearly, they're utilized almost 20 or half of it nearly to bring down fiscal deficit. So, and just mind you, FY24 fiscal deficit was 5.8. So 5.8 was promised to go down to 4.9%. Then the finance minister also made two very interesting statements in that budget. Number one, even at the outset, she promised that the next budget will have fiscal deficit of 4.5%. Yeah. And secondly, she said that incrementally, our debt is going to, debt of the government will rise at a lesser pace than the increase in GDP, which is the debt to GDP will fall. So I think all of that, to me, were clear hints that now the number one focus of the government is discipline, is to ensure that we keep our balance sheets tight.
Vikash, point taken. You've spoken about the PSU and the Modi stock, so as to speak. Your view now, after the recent correction, and how they are set up?
Incrementally, that was elevated expectations. There's been some correction. Instead of a 54% up move in the basket, we are down about 13% since elections. That was anyways our call. When we saw a government which was a more coalition-based, we started thinking of trying to be less focused on Modi stocks. I suspect that still expectations are elevated, given that capex versus those elevated expectations is, going to be lesser. So there could be further underperformance. So relatively, although one can be, now that some of those stocks have come up, one can pick and choose within the basket. But as a basket, I'd still not be too focused to push it. I think there will be a normalization of those expectations which got very elevated. It's been a slow process. That might continue for the next few months. And we get a better entry point into that basket, because I think the multi-year capex story, which will have the next leg of private capex picking up, is still with us. It's just that some of the times these stocks tend to run ahead of themselves at times.
Okay, got that, Vikash. Now, you emphasized discipline from the government. That's what impressed you. How about pushing for rural demand, welfare spend? Any possibility you expect in the budget?
Now, see, so we said that it's a tough trilemma to balance. Yeah. The trilemma is, of course, the discipline aspect, then the capex aspect, and the weak consumption economy that we are having. Now, which way will they bend the expenditure? See, last time they, for the first time, started talking about schemes to push jobs and skilling. Now, if we see more of the same, that could be more consumption side. And if they do that, then capex numbers may grow even lesser than what we are talking about. So that's the part which is something which we'll keenly watch. That now we know that the room for expenditure is limited once you commit to the 4.5% fiscal deficit. Now, which way do you want to focus that expenditure? In our current assumptions, we still kept some bit of a advantage to capex, not really building in new consumption-linked things. But that's something which we will have to watch out for. Incrementally, however, what we are seeing is a lot of the state government-linked, recent state elections, the the things that were done for the less economically, for the lower income strata in terms of pushing benefits, that will also start playing out during this year. I mean, all of those, that money will kind of go to their bank accounts. And I think all of that could lead to some improvement in affordable consumption where expectations aren't that elevated. So on a relative basis, that's why we've started moving, we moved towards staples very recently as our favorite.
Okay, all right. Point taken, Vikash. What about any specific announcements to maybe increase FDI, maybe take the limits higher, or encourage capital flows, maybe even into the equity market? I don't know if anything can be done to keep some sort of a support base under the rupee.
See, I think that's something which now there are some of these times we get very focused on the budget, but more recently, government has been making policies even outside of budget. So I do not know if that's something which they would want to deal only in the budget itself. Sure. I don't know if there is any tax-related benefit, etc. It's very tough to guess. And honestly, given the tight situation of expenditure, I'm not really sure they want to give up on too much of revenues. In fact, I'm more worried that they could look at finding new avenues of revenues. Maybe it could be higher disinvestment, more supply. So I think, I'm not sure if it will be specifically in the budget. That could be a thing that they deal even outside of budget as well.
All right, Vikash, got that. Thank you very much for sparing time on a Saturday morning, but I guess you had to anyway.